Bitcoin just hit an all-time high of $123,300 this morning, July 14th, 2025. And what happened in the hours leading up to it was nothing short of historic. Last night, with just 12 minutes to midnight, more than $1.3 billion in short positions were liquidated in under 60 seconds. This is a 1-minute chart, mind you. Bitcoin didn't even hesitate. It didn't pause at $120,000. It jumped directly to $121,000, like that level didn't even exist, and then proceeded to move higher to right above 123K. This is classic Bitcoin price discovery behavior. Violent moves, thin order books, and reflexive squeezes. But this time it's happening under a completely different market structure. Bitcoin's market cap now sits at $2.42 trillion. That means once it overtook $120,000, it also overtook Amazon, which is currently $2.39 trillion. Bitcoin is now the fifth largest asset in the world. Let that sink in just a few short years. Bitcoin has gone from being dismissed as a speculative toy to overtaking one of the most dominant companies in history. And while the price action looks parabolic, the underlying data paints a very different story. Despite the move to $123,000, Bitcoin's volatility remains at record lows for a major all-time high. Zoom out and look at the past decade or so. Every major top in Bitcoin's history has been accompanied by explosive volatility. And that's not what we're seeing today. Bitcoin at $120,000 has some of the lowest volatility ever recorded at a major all-time high. That alone is a massive signal. It tells you that this isn't a euphoric blow-off top. It's a measured, sustained climb. We are not at the end of a cycle. This looks far more like the middle or beginning of a structural bull run. And the why behind that matters, because this cycle is different, not just in terms of price, but in terms of who is participating. We're not seeing the frenzied retail surge that typically drives late cycle manias. Google search trends for Bitcoin are still flat. Social chatter is quiet. I know I haven't received many text messages from people asking about Bitcoin. Retail still hasn't arrived. The market is not running on hype. It's running on raw demand. And that demand is being driven by a completely different type of buyer. Institutional allocators are now the dominant force behind Bitcoin's price action. BlackRock, Fidelity, and other ETF issuers aren't managing capital for 20-somethings chasing moonshots. They're buying on behalf of long-term portfolios, so pensions, endowments, asset managers, and on, with decades-long time horizons. That's a huge shift from the boom and bust retail-driven rallies we've seen in past cycles. We're also seeing more Bitcoin treasury companies using intelligent leverage to acquire more Bitcoin for their shareholders, borrowing against existing holdings not to trade, but to accumulate and hold with no plans of selling. This has changed the profile of the bull market. Instead of a jagged, emotionally driven roller coaster, we're seeing stair-stepping price action. Legs up, consolidation, another leg up. Less retail emotion, more capital discipline. And that discipline is also a function of Bitcoin's growing size. At $2.4 trillion, it takes real size to move this asset, meaning it's harder for it to get pushed around by the same volatility-inducing forces that defined previous cycles. And that's what makes this moment so historic. Bitcoin is no longer the outsider. It's in the top 5 most valuable assets in the world. It's more valuable than Amazon, more valuable than Berkshire Hathaway. Only Apple, Microsoft, Nvidia, and gold are bigger. And this move isn't over yet. So where are we headed next? I've said this before and I'll say it again. One of the best directional indicators for Bitcoin is its 70-day lagged correlation to global M2 money supply. I created this particular chart back in July 2024, and since then it's blown up in popularity, but it's also tracked Bitcoin's trajectory shockingly well. If the trend continues, Bitcoin's next stop is $135,000. Beyond that, if global M2 continues rising, if central banks continue easing on the margin, not the US just yet, and especially if the dollar weakens further, Bitcoin could push to $180,000 over the coming months. That's not hopium, it's just a function of math and market conditions. Global M2 is a proxy for the total amount of fiat money in the world denominated in dollars. And as that pool expands, Bitcoin, as the anti-dollar, tends to reflect that expansion in price. That's why this correlation is so strong, and so people may opine about why it's wrong, but ultimately global M2 is a proxy for the very thing Bitcoin was designed to hedge against. It's the chart to rule them all. And if that expansion continues into Q4, we could see $200,000 per Bitcoin by year's end. All of this with no euphoria in the market, no media hype, and a public that's still asleep. That's what makes this cycle different. A quiet bull market is a strong bull market, and a quiet all-time high tells us something even more powerful. There's still gas left in the tank. Bitcoin just made history, but it's not done yet. If you're watching this and you're not yet positioned, you still have time. As you can see right here, this is a great chart from Jesse Myers, and I'll close out with this. The total global asset value is $1 quadrillion. Bitcoin is only 0.2% of that. So it still has some growing to do. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to like and follow, as well as reshare so more people can see this. And of course, check out Horizon. Horizon allows you to stack Bitcoin using your home equity without new debt, monthly payments, interest, or term limits. You can check it out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.